Yahoy, welcome back, citizens of the Blue Rock. Beers with Max again. Edgar Baum, Baume.
Just don't shout it out loud in an airport.
Okay, like don't shout it in an airport, everybody. The Baum, he's here. A public service announcement. If you ever see Hardywood gingerbread stout, run in the other direction. It's like brushing your teeth with engine oil. My wife picked it up for no good reason, and it's 9.2% alcohol, which I think so they're designing it so that you forget your terrible decision. But anyway, that's my story about beer for the day. Edgar, do you have a poison of choice, or are you sober? What's
I've
your story?
actually stopped drinking almost 6 years ago now. My body just stopped agreeing with it, and I still
It
enjoy a good sniff of a red wine that's good, but I don't drink it.
Yeah, because it's poison. That's why your body doesn't like it.
That is what my wife, who's a trained healthcare worker, told me.
Yeah, you need the PhD to get that one right. Well, I'm so one of the bright sides of breaking your foot is that it's a big motivation to not drink, because alcohol also prevents your bones from healing. So I've been doing really well. I will not be opening that terrible gingerbread stout. In fact, that stuff has been in the fridge for a while. So for those of you listening, if you want to get off the train, just buy some terrible, terrible stuff and keep it stocked in the fridge. Because if I ever get the the hankering for it, I'll just open that can and I'll be reminded of why I took a break. The
I will tell you,
anti-sniff.
I'll tell you that there are some very good non-alcoholic beers and sours these days.
I know I have been exploring them.
Yeah, they are very
And
good.
they've gone from like mainstream shame non-alcoholic beers to like craft non-alcoholic
Oh
beers.
yeah.
I was drinking craft IPAs in Vegas on the golf course, but it turns out if you drink six of them, you still feel sick.
There's a whole other aside I think we can go and do with branding in this space. Uh,
Yeah. Or cognitive recall.
yeah.
Yeah. What are we? What do you do? Why are you the way that you are, Edgar?
I boy, you're asking like an existential question here.
Yeah, we just you said let's
We're,
dive right in.
we're
There's
going
no
down
prep required.
Jean-Paul Sartre, do I exist or not? Conversations. So it's like it's a pleasure to be here. I think I'm at kind of like the perfect storm moment in my life. I'm somebody who loves seeing other people succeed. I've always had an aptitude for math and connecting things together, and we're here to I think talk a little bit about how that could solve some business problems with what I've gone and done in my company and possibly other areas of my life.
I always liked math because I didn't like my teachers. And math was the only thing that was objective.
Hmm.
And like many people on LinkedIn, they don't like what I write. So I'm a big fan of math. I don't do much aside from well, I guess I do a little bit. Anyway, what I'm really excited to talk about, because I'm a sucker for intellectual property and things with names. Uh, Edgar, welcome world, the creator of the Winnable Addressable Market. And for some, like, I think I was having an outer body experience yesterday because I wrote a post, and my post this morning was all about the blind investments going into marketing products that no one will ever buy.
Hmm.
And I know it's still early, but everyone's like, yeah, we have this problem. Because on the agency side, it's like signing your own death warrant on day one. And on the brand side, it's, well, I guess it used to be okay. Like for a long time, it was just okay because brands didn't actually need to make money, which I learned about.
Uh,
Uh,
yeah, you're opening up, I think, a bit of a can of worms in terms of the role of brand and marketing. And I think what a lot of people forget about is what is the point of brand and marketing and what is marketing in the world
Perfect.
today.
What a perfect question to start
So
with. What
um,
is marketing?
I I can tell you right now that it sadly has become an eye of the beholder definition in terms of how people operate in it. I would say at one point, marketing actually was a full fledged arm of competitive advantage for organizations. And what it actually was oriented around was understanding your market. And then by understanding your market, you would then figure out how you communicated with it, how you sold to it, how you made sure that you stayed contemporary with current needs and sufficiently ahead of it to anticipate future needs. And what I think it has done is it's a term that has been diluted so much that it's in the domain of words like awesome. Everything's awesome these days, Max.
You know,
Hundreds of years ago, awesome was there's a bolt of lightning coming from the sky. It landed right in front of me. I didn't die. That was awesome.
we're full of awe. There's some awe
Yes. Yeah.
in that story. Yeah, I've really tried to go on a buzzword diet. I was interviewing someone the other day, and we got to talking about community, which is another abused term, community,
Oh God. Yeah.
marketing context.
Yeah.
And I said, "What does community mean to you?" And he gave a great definition actually. Like I'd put it on the wall, you know. I'm like, perfect. And he said, "Well, what does community mean to you?" And I said, "No, no, I'm like water. I just go with whatever you say it is, and
Mm-hmm.
I try not to use words that don't have like a dictionary defined definition. And even so, I try to stay away from it. I think the only thing to do is ask questions and listen, and just uh, try and follow whatever the heck buzzwords mean to them or how they judge success.
I think that's sadly the case. Look, we work with clients regularly, and we're going and seeing that they don't even have alignment internally on internal definitions. So it just makes you wonder, like, what are you actually trying to go and do? And going back to, what is marketing and what are we trying to go and do? The winnable addressable market development that we have is a solution that is necessary for marketers. But as we've, developed it and, we're cross-disciplinary in the work that we're doing, we are seeing how it is a necessary identification for salespeople. It is a necessary identification for finance people. It is a crucial definition for strategists. And by strategists, I mean by like the CEO of the company, the founder of the company. We're going and seeing how much of a difference it is in valuation in organizations by being able to go and articulate, what your value potential is for the company, which is directly tied into how much winnable addressable market do you have left to grow into.
Yeah.
And that's been, I think, that big aspect of it. And sometimes I describe what we go and do is both silo busting, but also going and bringing different functions together. And that, I think, is a really key part of how to think through this. And I'm happy to kind of share more as you dig in deeper into what we're talking about here and how it ties to all aspects of business operations.
Yeah. Well, I think we're going to talk. What I love about it is that it's rooted in reality, and I've been on a tear of like back to the basics. Let's talk to customers, just really basic things, because I think we've spent at least the last decade, maybe more, talking in buzzwords, looking at dashboards,
Mm-hmm.
and the dog wagging its tail at us. Maybe that's the wrong analogy. Is Martech. At least that's what I've experienced. Martech, they got the big checks. They don't actually need to make money. The money goes into training service providers and marketers to do things that benefit the Martech company. Anyway,
Yeah.
there's a lot of can of worms that we could do here. But I remember, like, the reason I'm excited about this is because the first time I got smacked around, um, not like domestically in business, I mean, but I was pitching to investors, and I
Mm-hmm.
had passion and what was that other term? I don't know, maybe confidence, something. Anyway, passion and confidence. And I was like, yeah, this is what this idea is worth, and this is how we're going to make money. This is who we're going to sell to. And their only question was, okay, well, who said they would buy that? And I was like, well, this is our target market. It's all. They're like, no, no, no. Like, what are their names?
Yeah.
Like, did you speak to them? What was their level of intent? What did they say they would buy it for? Like reality. And at the time, I was like, what a bunch of assholes. This is a great idea. But as I get older, that's all there is. That's all there is talking to people that cut checks, and you ask them, hey, would you buy this? And
Yeah.
even then, you got to have like, oh, sure, you know, 20% of the people that say they'd buy it actually buy it. So I'm thrilled to learn more. Winnable addressable market, hit me.
I I love where you went there in terms of being able to have that conversation with people. And I would have to say, for simplicity's sake, I think there's three major stages that organizations are in that winnable addressable market has to be treated differently. One is when you're trying to build a company or build a solution within an existing company. And in that environment, what you have to figure out is, are there actually people who want to buy what you're selling? And would they buy from you? And what I'm noticing in a lot of situations working with earlier stage companies is they're like, oh, there's this amazing market need that's there. And you are probably correct in your assessment of the market, but you haven't figured out who these customers would be able to buy from. Like the big difference in our winnable addressable market approach is that eventually to have it be fully functional and fully utilizable, you have to go to the people who buy in the category, whether they're people buying for themselves or people buying on behalf of their organization or people buying with others on behalf of their organization. So that's kind of like that earlier stage kind of dynamic that's there. And there's a lot of great ideas that are out there that will go and create small markets. I think a lot of it is like, what are you trying to achieve in terms of scale? So if you're trying to build, a company that serves the locale, you got to make sure that there's a critical mass of demand outside of the status quo. That would be like, restaurants, corner grocery stores, etc., whatever it may be. The second stage that is there is when you've kind of reached kind of critical mass on an offering. Things are humming relatively well. And the dilemma that becomes is, how long are you going to stick around selling what you're selling? And a lot of companies make the assumptions that they can stick around forever. And I just recently read a report globally done, I think by PwC, was a huge share of CEOs don't know if their companies will be around 10 years from now. And the reason for it is that we are in an era where demand, convergence of different functions, capabilities, services is coming together so fast that things that used to stick around for decades, if you went and invented them or you came up with a better way of delivering them, you'd have that market. And what's happening in those situations, you have to figure out from a winnable addressable market point of view is, what's your business as usual, right? So how long is the market going to cycle through buying your category the way you're serving it or selling it? And then do you have license to give anything else? We were in conversations late last year with a prominent mass market brand. And we went and identified in an independent assessment that we did of them that they had actually license to sell a premium offering to the market, but not because everybody wanted to go and buy it. It's that they had become big enough, recognized enough, and trusted enough that a small percentage of the population would be willing to buy a premium product for them at a scale that this company could produce it and sell it. Right? So that there's like hundreds of thousands, if not millions of people who would actually buy it, and that made sense for the business, right? So they have license to expand. So that's kind of like you're at this maturing stage as a company, and you're trying to figure out where to go. The last stage of a lot of organizations is they are losing share. And the worst situation you can be is your revenue is still growing and you're still profitable.
Because people ignore the problem.
No, because you're less like of the needs in the market, a lower percentage are buying from you, than you used to in the past. So say you used to have 20% market share, okay? And you were growing at 10% per year because the market was growing at 10% per year, roughly. So you're
Yeah.
keeping in line. You're about, the happy medium for about a fifth of the people buying the category. But say your growth now has dropped to 5% per year, but the market is still growing 10% per year.
Mm.
So you're like, hey, we've slowed down. So you're like, well, hey, we're still making money. We're still good. But at some point, it's going to become the death by a thousand cuts. And all of a sudden, that growth is going to fall off a cliff because you're going to run out of people who will buy from you. And that is probably the biggest miss that I'm noticing when we're doing winnable addressable market work is that people are assuming that purchases of the past, even purchases of the present, are an indicator of purchases of the future. And what I can tell you is that applying the winnable addressable market approach, that is not the case. Because people may not be able to change who they buy from today, but they sure as heck can change who they buy from tomorrow. So we're doing a future backwards look in engaging with people in the market, and we're like, how are you buying in the category? If you didn't have restrictions, who would you buy from? That changes the picture. When do you anticipate your current restrictions to buy to change? Right? Oh, my contract's going to end in 2 years. Great. Would you renew with your existing provider then? Or would you go to a competitor like, I can't wait to switch to this new shiny toy in the marketplace? And I'm like, so are you going to renew in 2 years? No. We're ready to buy from these other guys. I would buy from them today if I could get out of my current contract.
Well, and this is a big sleeper. I don't know. I just started saying sleeper churn the other day, and people liked it. But they go, oh yeah, well we keep our clients on average for 2 years. I'm like, okay, well how long's your contract for? And they go 2 years.
Yeah,
Like so your renewal rate's actually close to zero.
that's exactly it.
Yeah.
And people are not looking at that part. And the danger of it is that you're still growing. So you think you're still being successful. And we've worked with a lot of companies in that third stage of business maturity where the fundamentals look good enough and they're not willing to make the investment into understanding how to be relevant for the next 5 to 10 years, sometimes even 15, depending on the industry that you're in. And as a result, when their current momentum flatlines, their revenue almost plummets. And because people just don't want to buy it anymore, or they don't go looking at it. I'll give you a more public domain example that I can share. You're probably familiar with some of the products that Kraft Heinz sells. Kraft Dinner, Philadelphia cream cheese, Heinz ketchup. Ring a bell? Any of these?
My kid eats a lot of ketchup
Great, right?
and
So
mac and cheese, and my daughter likes the mac and cheese. So like we're like a Kraft family.
perfect. So you're Kraft family. So you are actually a bit anomalous when it comes to the past 80 years of of the Kraft Heinz product portfolio, because you are now in the minority of Kraft Heinz loyalists.
Hmm.
40 years ago, you would have been in the majority. So when they went public after merging through private equity, and then they went public 10 years ago, they went and valued their brands. And they put their brands on their balance sheet, and they said, oh, our brand portfolio is worth tens of billions of dollars. And one of the problems that they went and did is they went and assumed that all generations were going to continue to buy Kraft Heinz products at the same ratio as their current or recent generations of buyers. And within a matter of years, they went and discovered that that was not the case. People under the age of 45 did not have the same attachment as people over the age of 45. People under the age of 35 had a lower attachment. People under the age of 25 had an even lower attachment to it. And now all of a sudden you went and started looking at the demographics and you're like, oh my gosh, this is a problem. And they were obliged to disclose that we overestimated. And when they went and reassessed and redisclosed their valuation, and not the specific details, but enough to say, hey, we overestimated, their stock price took a massive hit and just did not recover. Because what they went and realized is that their future winnable addressable market was made off of assumptions versus reality. And to what you went and said, it's about being grounded in reality. And that's why winnable addressable market is so critical, and why I'm so, like, railing against total addressable market, because total addressable market is an absolute fantasy. It's a term that's been around for a quarter century, where we're like, oh, it could be so big. It could be so big. And it's like, yeah. Well, it's like, how big is it going to be for you? Well, like, we just need to win 0.5% of share and we'll be worth $1 billion. Okay, great. How are you going to win your first 50 customers? And like, we have a great idea, right? And it's kind of what you were going and starting with at the beginning. It's like, okay, but has anybody paid money for your idea? Have they
Yeah,
come back
they
and paid
wanted
money
the
a second
list of the
time?
50 customers,
Yeah.
or the list of the 200 that even if I was the world's greatest salesperson, I could sell 1 out of 4. You need the name. What? Show me the names.
And this, look, we're living it in itself. We went to apply this on ourselves. We became very conscious of the fact that we had a very limited winnable addressable market as a share of all businesses that are out there. It is still big enough that we can be a successful business and grow, but we're not going to be an Nvidia anytime soon in terms of valuation and market purchasing.
Well, does this also have something to do with what you're able to deliver or what you're able to manufacture? So if you have a growth plan that says, okay, let's say I did talk to all these people, and these 50 companies will buy from me. Like, I can work with 3 agencies at a time doing my real thing.
Yeah.
So there's a timeline to get to that 50. Even though they want to buy, I can't deliver the service, or I can't manufacture the product fast enough.
You're nailing the biggest thing that is there. And this took me a long time in my professional career to figure out, which is the ability to execute against demand.
Yeah.
Right?
I feel like I got something right.
Hey, no, but look, it's an important aspect of it. A lot of where we've been shifting our work is making it much more explicit on where and how you can execute against this knowledge. And can your company execute? I'll kind of shift to a slightly different way of looking at the market again. You've probably heard of like white space or blue ocean strategies and things like that, and kind of delivered by a lot of these, like, either think tanks or large management consultancies will come in and say, oh, there's a massive opportunity in this space, billions of dollars, tens of billions of dollars, and they are correct that opportunity exists. What they haven't identified, frequently, sometimes they're fully off the rocker, but most of the time they're correct. But then they assume that any company can fulfill that need. And what we're going and identifying is 2 major things. One, your company may not be the one that has the license or to be able to, or can step into the demand.
Yeah, I
to
was gonna
fill
say
that need.
you don't mean like a formal license, like you go to the
Yeah.
police station and
Yeah,
you
yeah,
get a
yeah. No, like, I
license.
mean,
No,
like, permission.
yeah,
Permission
there
from
you
the
go. Yeah.
market to meet this need. That's a really big one. It's like, you just don't have the reputation, you don't have the strength, you don't have the public endorsement, whatever the heck it may be. The second one is, you may not be able to execute against that demand, or you may not be able to execute at the scale that you need to be able to get that whole cascade of demand fulfilled. And that is what we're kind of going and seeing in a lot of our work is, we're going and seeing these crazy numbers thrown out. We were working with a company a couple of years ago. They had estimated over $40 billion as the global total addressable market for this type of product or solution that was there. And then we went and took a look at, okay, well, their actual financials were less than $500 million in revenue. So they don't even have 1% market share. Okay, but they're espousing that they have so much growth potential that's there. And when we went and took a look at it, and we saw, like, okay, what have you actually gone and done? In some industry sectors in the United States, they had already gone and sold to more than 70% of all the companies that exist in that industry and walked away with tens of millions of dollars of revenue. So that means the majority of an industry that spends billions per year on these types of products They've tried to sell to the majority, walked away with a fraction of market share. And the reason why that part was not being considered is because they're looking at it, well, like the TAM is so big. If we didn't win here, we have all these other places where we can win. But when we're bringing the winnable addressable market notions in, like the first one is, what's the maximum buying population? Just period. Just first question. How many companies or people can buy what you sell? Whether they know you exist or not, whether they even know that your type of product or service exists. A lot of people have a hard time answering that question. So, like, if we do the consumer one, they're like, well, we're targeting the United States, and, there's over 300 million people in America. And I'm like, great. So you're telling me that 6-year-old in Oklahoma is a customer? They're like, well, no. I'm like, okay, great. What's the minimum age of somebody who can buy your stuff? They're like, well, probably 25 years old. Okay, well, that chops off 60% of the 60 million of the U.S. population that's below 25 years old.
And now you've already lost the discussion, because if you couldn't take out the 6-year-olds, we got a real problem.
That's exactly it. So you kind of go in and you hone in and you hone in, and what we've gone and learned, regardless of consumer customers, regardless of B2B customers, we've never seen an organization where their winnable addressable market is greater than 25% of the total people or companies that buy their category. So it doesn't mean that the types of things they sell aren't being bought. It's that they just don't have enough affinity of being able to buy from everybody, of being bought by everybody. And what this kind of goes to is kind of like, I think, the fallacy of TAM, or total addressable market. Because when you go and say the market's $40 billion, well, yeah, that's it. That's if everybody buys from one company, and there's no like reduction in price, and everybody's willing to pay for it at this amount, and people aren't kind of thinking through like what will happen over time, what will happen if this becomes really, really popular. You're gonna go and get competition. Competition usually comes in at a lower price and at a more premium price. So you got to be able to figure out, which end of the market do you want to support? And that is kind of where people get trapped, is that they don't think through enough for how the customer will evolve over time, because they don't bother finding out how different the customers are that they go and give a broad stroke brush to.
And then, so, I mean, this is the long-term thinking that would be fantastic in a investor conversation, leadership planning. What sort of implications does this have for, let's say, this quarter's marketing initiative? I see, like in my world, people are spending money on ads and content, and we're going to go we're going to go create a relationship, reputation in this community over here. How much of this work leads to shorter term performance?
So the performance can arise quickly when you get to the targeting effectively. So let me kind of give you a high level example on this. Okay. How much of the market can actually go and buy what you're selling at any given point? I think it's a really, really critical thing. Like outside of staples like bread, milk, water, etc., a lot of things do not have a very regular cadence to when they're bought. I'll give you an example. I was working with a mobility company years ago, and they, for some reason, their forecasts assumed that each month was going to have the same number of new contracts signed. So they would go and set that as a target, and guess what happened? 10 out of 12 months of the year, they did not hit their monthly target.
Damn.
Right.
And then they're double the monthly target in Q4.
Exactly. Right. But then the margin was really bad because they would go and put things on super sale. And then they would go and advertise that it was on super sale.
Because they're
now
desperate
all of a sudden,
for that.
Yeah. So there's a cost. So going back to what you kind of went and said in terms of how much the marketing is today, I think a lot of the question is, who are you trying to reach with the marketing? And what we've gone and seen from a winnable addressable market point of view, how it affects brand reputation, purchase drivers, recommendations is typically in one of two ways. One, it allows you to go and get the attention of people that would be inclined to buy your offer in the family of other offers for this type of product or service in the way that you deliver it. So you quote unquote speak to your winnable addressable customer. And then like, oh, I've been looking for something like this. I prefer to buy it from you. Okay. The second one is that you become inherently recognizable by people that you did not intend to get as your customers, but are actually in your winnable addressable market, but not from a direct outreach point of view. So what I mean by that is that I can't come to you, Max, and tell you we have this great product or service. But if I go and demonstrate in the market the types of things that are evidence points for you, you're like, that's the company that I want to be able to buy from. That's the person that I want to be able to buy from. And it's that subtle difference between being sold to versus enabling being bought from.
It's my experience with IT service providers. I do not have the experience to pass the sniff test, but the ones that I work with come from referrals from agency, my world, and they've already decided that, hey, for us, we've got the CEO's driving this initiative. He
Yep.
doesn't care that Max hasn't worked with 12 other, IT companies and written all the books in the IT space. He wants service design and he digs his posts.
Yep.
So, yeah.
So that I think is a really key part that's there. So when you're going and taking a look at what am I doing in marketing this quarter, it also falls into two very simple domains. And I'm probably going to get killed by a bunch of marketing theorists for this, but this is kind of arising out of years of longitudinal evidence with our clients. So marketing activities in quarter do two things. One, they remind/reinforce that you can be bought from with people that are in a position to buy now. That is a very small share of your total customer base. The second thing is that it sets up the foundation for you to be considered or bought from in the future. And
Which
that
gets greatly discounted because they're not buying now.
correct. And what I'm noticing in a lot of the quants, the finance folks, the sales oriented individuals, they're like, well, we can't quantify what share of the market will buy in the future from current marketing activities. So we're going to give that marketing activity value of 0. We're only going to go and give value to what we win this quarter. And the way that I kind of go and take a look at that argument is, okay, that's great. So stop marketing. And they're like, well, we can't do that. And they're like, why not? Well, it's because, we need people to be able to buy from us. I'm like, okay, well, if you're only giving all attribution from marketing to what happens in the quarter that you execute on the marketing, then what's the point of marketing?
Yeah.
Most of it is wasted on a bunch of people who won't buy from you right now.
Well, and you can solve that problem by going and talking to a portion of the recent people that have bought from you. And say, why
That's
did you buy from
assuming
us?
you're
And like,
enlightened
well,
enough.
you're the like we've been following you forever. At least that's with the people that buy from me. They've been silently following me for years.
Yeah.
And it came from from a referral or somebody mentioned me to them. And so if they had the problem yesterday and they first heard of me yesterday, they wouldn't have the trust to work with me. So
that's exactly it. So
you can't quantify it. So you give it a value of 0. However, if a majority of the people that buy from you learned of you and you started developing that trust far earlier than that quarter. So what do you do?
So we've been able to identify that is actually quantifiable. And instead of it being to like a precision of like I can quantify Max versus Jim versus Colleen or Jillian, what we can go and identify is that this is the profile of people that are more likely to go and buy from you because of marketing exposure and that validation, right? But that is one part of the whole rationale for buying. And I think what's going on is in the marketplace, and this is a trend I've been seeing since I started becoming a professional in the late 90s, of people trying to reduce the drivers of purchase to very simplistic things, and worse, trying to have the drivers of purchase be what they define them as. So we sell blue cars, okay? People buy our cars because we make blue cars. That is like, I think, a very stupid, simple example, but I'm telling you, there's not a significant deviation away from that in terms of what we're going and seeing. There's a lot of companies that are founded where people go through it and say, well, I want a solution like this, so I'm going to go and sell it. And I interpret that the marketplace for solutions like this is worth tens of billions of dollars. And these people can't wait to go and find my company to go and meet that need.
I know my buyers because I am one.
Correct. And yes, it's important.
No, dude, you're a founder and you got passion and confidence.
That's exactly it. Yeah. And look, I've had to go through that evolution as well. I'm very passionate about what I go and do, but I've also had to go and adjust and pivot or slow down to be able to go and actually meet what is commercially valuable. Like we don't have a company if we don't have a customer.
Yeah.
Okay, we don't have a company for the long term if we don't have customers for the long term. And I feel like that part is really being missed in a lot of organizations. I wrote a piece last year about just being incredulous in a meeting with a publicly listed company. And an executive in the company says, well, look, our strategy is to grow 20% over the next 3 years. And I was like, what? And I'm like, what the heck does that mean? And I really wanted to, like, I was under NDA, so I couldn't, go and buy their stock and start shorting it. But I was in that moment, I'm like, this is horrible. That's not a strategy. There's no customer in that conversation. That is a target. That is an assumption that what you're going and selling is going to get bought. And I think that's the big gap that's there. There's a lot of people go and make assumptions about what they're going and doing, and it's going to drive that value. In my graduate course that I teach, I talk about how there's branches of valuations, which are just systemic measurement of assumptions. Well, I'm going to make these assumptions today, and I think your business or your brand is worth so much. And then a year from now, I'm going to make some new assumptions, and I'm going to determine whether your business or brand is worth that much. But you never go and explain why your assumptions changed. You just go and say, well, my valuation changed. And people think that it's legitimate because a professional had gone and done it. But if we kind of go back to the marketing domain that's there, to your question about like short-term activities, if you go and spend tens, hundreds, thousands, millions of dollars on keywords and ads that is there, and you're like, well, we had a 8% click-through rate. Okay, so that means that 92% of the people that you went and served the ad to were not affected by your message. So if you had an 8% click-through rate, say you had 8,000 clicks, okay, so that means 92,000 people who saw your ad didn't go and put any value on it.
Yeah.
So now extrapolate that.
If they don't put any value on it, they're not a part of the winnable addressable market, but they're certainly a part of the total addressable market because you target.
Correct. And the thing that's there is that there's two things that happens with that audience, because if I now go and serve them again and serve them again and serve them again, so they keep seeing my ad, there's something that arises, which is a very kind of part of psychographic research and things that has gone and been done, is that you eventually start getting annoyed. Okay.
Yeah, I was gonna say pissed off.
Yeah,
I didn't know where you were going, but I was like,
but it's like, but you kind of get that. Like, I'll give you an example. Okay, I'm part of this email targeting campaign from this company that is like, Edgar, are you trying to raise capital? Okay, I've not opened a single email. I think I reached 17 emails from one person. And at some point, they're like, okay, we're going to stop. Then they switch to a different person from the same company, trying to go and ask me, Edgar, are you going and trying to raise capital? I'm now at count 13 with it. I will never go to this company
just out of principle
to go and raise capital out of principle. And the thing about it is there's good to know, and then there's this is getting stupid. Okay,
Yeah.
so I may ignore the ad because it's not relevant to me right now, but at a certain point you got to be able to figure out how much of the same type of messaging doesn't matter. So going back to the winnable addressable market point of view, the winnable addressable market isn't that there's a bunch of max trailers that are out there and that's my winnable addressable market. It's that there's a bunch of max trailer like people that buy for a relatively similar set of reasons that I can cater to. And then there's another group of people in the marketplace that are also in the winnable addressable market, but not for the same reasons as the max trailer types. And that is missed by a lot of marketers in how they develop and execute on their marketing campaigns, is they take the average buyer thinking that the average buyer is the buyer, when the reality is that the average buyer is less than 0.5% of the total population if you're lucky.
One takeaway for me, this comes back to when organizations decide to actually target, which can be like really, really long. Like you can have really mature organizations and they're still like, oh yeah, we help SaaS and healthcare and farmers. It's like, what? you
Yeah.
just you're just naming giant industries. Um, but they'll look at their current portfolio of clients and they'll say, well, that's our when we can win in these categories because we have one.
Yeah.
And what I'm sort of looking at my work, because a shortcut for me has always been, well, show me your best customer. And because I don't want to have this conversation for 3 months, I don't want to argue with you, and we're going to find out pretty quickly anyway.
Mm-hmm.
So let's take your best customer and let's target that. But what we're saying here with Winnable, and it's like, for me, it's just a mindset. Like I haven't looked at your documentation behind it or what the actual offering is, but it's changed my mindset around who to target, because just because they are your best customer doesn't mean that you won them accidentally or you won them out of something that's not replicable. And
Yeah.
even if it is, it still might not be the best decision. So there's a whole nother layer of it, really just starting with, would you buy from us? Like, can you buy this? Not even before would you. Do you have the ability to buy something like this?
Yeah. And look, it actually is a complex question. You can make it simpler. The way that our work has kind of executed in the marketing and sales domains is that we've been able to reduce, like, what's the minimum number of necessary types of information that you need about your audiences that you market to, and from salespeople, what are the minimum question types that you need to answer to determine should you take your next sales action.
Right.
and
Fit.
and that's the really big one. So, and we split it call it before you pick up the phone or type your email or send the message, and then one's when you're actually in the conversation with them as a salesperson that's there. On the marketing side, it's the same thing. What we're seeing in the marketing domain is that people are viewing as any engagement as being valid engagement.
Yeah.
And that to me, I think is a really false flag that's there, because you're supposing that there's relevance. And we've gone and done analysis on companies across their different mediums, across different industries, from consumer to B2B. And I'll tell you a bizarre fact, Max, that we've gone and seen. Regardless of industry, B2B or B2C, we typically are only seeing that the website that companies have is used by about 40% of customers. And that's any company's website that sells their types of product services. The best we've seen in any one industry is we saw 52% once. So what that means is that 60% of the market typically does not go to the websites of any of the companies that sell the types of goods and services. So what happens with those 60%? Okay, so are some of them like exclusively people just searching? The answer is yes. But then how are they going and searching? Some are just taking top hits, whether they're advertisements or something else. Other people are going just straight to people that they go and know. And all of a sudden you start going and discovering is that first point of entry for how they get exposed to your company materially determines whether you're ever going to be considered or not.
Really?
Yeah.
Give some examples of ones that are like the poles, great and terrible.
So we do a lot of work with tech companies, SaaS, pure play technology, etc. One of the things that we've gone and seen there is if they are a challenger brand, meaning that they are kind of trying to leap to the next generation of the technology or a better consolidation of the offering. In those situations, there needs to be evidence from a person's network that there's belief in people that you trust that what they're doing is next generation enough and that it's worth the pain of switching from what you're going and doing today. That is a small percentage of the population.
Validation.
Peer validation. There's another set of the population that is like, I just need an industry expert, could be an industry analyst, an industry publication, to go and say, this is really worth it. But it's another small percentage that's there.
Yeah, Gartner says in their
Gartner
quadrant,
says,
it's the quadrant people.
Exactly. Then there's another group of people that are like, I don't give a damn what anybody says. I'm going to go and do my own research. Guess what those people are? They're the ones who go to 16 different websites and go and do their own compare and contrast and follow different methodologies, etc. So now all of a sudden what you go and have is you don't have a TAM of $10 billion or $100 billion for your product. You have a group of people who buy in a certain way, and how they buy determines whether you're going to make it. There's a lot of work that has gotten identified in these macro studies from BCG, McKinsey, other firms, etc., that 90% of the time in B2B purchasing, the company that was already known, like recognized by the buying team collectively, is who got the bid at the end.
Yeah.
Right? But the thing is, so but people take the mistake from it. They're like, oh my God, that's everywhere. And that's not the case everywhere. There are some categories where that number is substantially lower than 90% because all the incumbents suck. And they are looking to find an alternative, in which case they are doing their research on finding that. So what you need to understand is that recognition substantiated? Is it because they actually are the best three in the category for what the company or the buyer is looking for? So it's these kind of like simplifications of the messaging. Like LinkedIn research came out, I think last year or the year before, around the 95-5 rule, that 5% of your buyers are in market at any given time. Bullshit. That's not true. What?
It's got a ring to it, though.
It's got a ring to it. It makes it very simple. But the thing about it is it varies by category. There are some categories where it takes you a year to 2 years to buy, in which case they are in the buying journey, but they don't want you to be in the sales journey. They just want to keep buying. They want to keep going through at their pace, etc. That's there. They don't want to be sold to. And one thing I've seen over the past 10 plus years professionally is we've gone and seen the ratio between being in the non-sales part of the buying journey to the with sales part of the buying journey has dramatically expanded. So it now we're going and seeing a ratio like 3-1. So they're spending 3 times as much time before talking to a salesperson from any company that is selling their products and services to how much time they go and spend with that person. So if you're like, it takes 3 months to close the deal with the salesperson, they're spending 9 months going and doing it. And by the way, it's not uniform. We're going and seeing some sectors for our clients where there's a segment of the market, they will get everything done in 6 months or less. They're like, we need a new solution. We're going to go find out who it is. We're going to make the purchase, go through the marketing part, go through the partner part, go through the salesperson, buy, implement within 6 months. Then there's other ones in the same category. Oh, we take 3 years to buy. And if you are not catering to the pace of your customer, to the needs of your customer, to the credibility points of your customer, then you're out. Yeah. Which is why I hate TAM. What you got to figure out is your winnable addressable market is like who would actually buy from you? Why would they buy from you? And then against that winnable addressable market, who can you execute against? I don't have the budget to be on every single podcast on the planet, to be profiled by Wall Street Journal and Harvard Business Review. I have a whole segment of the market that can never know we exist because we don't have that budget. We don't have the ability to execute against it. So we have a much smaller near-term winnable addressable market, but we have a very good sense of who our customer is and who our customer isn't within a matter of minutes in a conversation.
Okay, so let me try and sum this up. Bad news first, then the good news. Bad news is your addressable market, your winnable addressable markets, at most 25% of what you think it is today. It ain't that, and there's some math that you need to look into. That's the bad news. Is people need to school themselves.
It's
They need to be better.
typically about 7 to 15% is what we're
There you
going
go.
to see.
So it's like great. Take that 100, take it to 7. We'll meet you there. But the good news is it's going to force you to really, really, really understand who can buy from you, when they buy from you, how they're going to buy from you. It's going to cut down on the marketing noise, the overspending, the confusion. I see it as a very optimistic tool for marketers, for agencies. Because I can see the folks that just want to put their blinders on and rely on the golden founder syndrome.
Yep.
They're not gonna like this. You probably get some of that of like,
And we do. So I'll give you the winnable addressable market paradox, the WAM
people don't like the
paradox
truth.
that we're running into.
The paradox.
So,
Yeah.
so here's the paradox. Every single one of the companies that we've worked with that has deployed marketing and sales and product, or any of those three, against their WAM findings, has gotten at least a 30% more efficient spend. And if they've stuck to their guns for at least 12 months, they have gotten at least double the value for the same dollar.
Yeah.
And if you're getting double this value for the same marketing dollar, the same sales dollar, just do the math on how it ties to the bottom line, and that increases the valuation of your business. And that right there is what we're going and seeing, is that by getting laser focused on who you can win with and execute with in the near term, you're actually going to build a more sustainable, valuable company.
Yeah. Yeah. And mindset wise, I'll just throw in that it's not about who you want to target. It's who can buy from you.
Yeah.
I love that. That's like the one-liner for me. I'm a fan of one-liners.
So,
well,
I love it, Max. That's a great way of summarizing
let me know where to make out the check. I feel like I got more in this conversation than I did in my entire senior year in business school with a concentration in marketing, which I aced, by the way, because I won a national contest. I won a national marketing contest.
Right on.
And then I won a national marketing contest, and they hired me, and they didn't implement the idea.
Why does that sound so typical, Max?
They ran a national marketing contest for ideas. I won the national contest. They didn't take the idea. Yeah. With that, I bid you adieu.
It has been a pleasure, Max. I hope the people who listen to this, or the extracts that you kind of get from this, are just going to have people think differently. And if you want to
if it pisses some people off, I know that it's really going to resonate with someone. That's my litmus test. So thank you for that. For those of you binging on Beers with Max, don't operate any heavy machinery. Remember, no gingerbread stout for you. It's 9.5%. Tastes like trash. Tip your waitress. See you next time.
Max, thank you.